So I'm delighted to have as my guest today, Mary Beth Sullivan, who I've known for a number of years and who has provided tremendous service to banks that I have dealt with and many, many others as the managing partner of the Capital Performance Group. So Mary Beth, welcome.
Thank you, Ned.
Can you tell me briefly what the Capital Performance Group is up to?
Sure. CPG is a management consulting firm, and we just celebrated our 20th anniversary last month. We mostly spend our time on strategic planning, strategy consulting, and marketing and risk consulting. So that's sort of us. There's a group of us in DC, but we've got consultants around the country, and we're going strong.
And I know you are, because you do provide great advice to bankers who are trying to figure out, among other things, how to grow, which is one of the topics for most of my clients. I am interested, because you have a window on the planning process that's going on in banks. I wouldn't want to know how many hotel rooms you've logged over the course of those 20 years getting ready for strategic planning sessions. But recently you've been involved, and I'm curious what you're seeing in terms of bankers' impressions of the environment, specifically the competition. You and I both know that there's many competitors today. So what are you seeing?
That's right. Yeah, well, today's environment is quite different, the competitive environment. A couple of things have been true almost my entire banking career. One is that the traditional business of taking deposits and making loans, and the margin that you earn on that has been declining for 20 plus years. And that is really a factor of competition, not the rate environment. Now we've got fintech competition significantly altering the landscape. I think once again, I feel that pressure with my clients. Perhaps but this is sort of my take on it. I think we're going to really see that on the funding side of the equation, to be honest with you. When you look at the largest banks in the country, plus the financial technology banks, if you will, the Chimes and the others of the world that are really fintech platforms, essentially, and they're gobbling up huge numbers of younger consumer deposit accounts. I think we may not be feeling it now, but we're going to feel it in the industry as we figure out how to fund what's essentially in the traditional banking space, commercial lending operations, right? Mm-hmm. So, the competition it's brutal, even in the commercial lending space. You've got private equity firms lending money. You've got distributors who can lend you the funds to purchase equipment, you name it. Everybody's in the game. So banks really have to carve out kind of a way to explain the value that they add. And I think that's why there's so much talk around becoming, not just lenders and depositories, but really business advisors to customers, and figuring out how to do that more effectively is a big focal point for a lot of our clients.
So one of the things that a lot of community and regional banks are struggling with is trying to equip those bankers with the kind of tools they need and the skills that they need. When you started in banking, when I started in banking, we went through training programs at large organizations, which by and large created a pool of candidates for community and regional banks. That's no longer part of the picture. So what are you seeing banks doing in terms of equipping their bankers?
So I see them putting a lot of things on the list of stuff we want to do, and then having a real challenge getting folks to adopt new ways of doing things. So then the human factor, training and really change management becomes almost a bigger part than the tools themselves that bankers have access to, helping them to figure out how to use. We've got a lot of banks in this country where the commercial lending team, these folks have been in the business for a while. They've grown up, they know how to do it their way, and but the world around them's changing. So there's, going back and teaching fundamental skills, fundamental computer skills is one place I actually see our clients spending time, but then looking hard at, information solutions that they can provide to those bankers, ways that marketing and other sales support parts of the institution can support the bankers, either in getting out good content or helping to onboard customers in an effective way, you name it. It's really engineering around the value that the banker adds and being real clear on what that is. And then take the other pieces and parts that the banker maybe doesn't have to be so involved in and figure out how you can re-engineer that so that it's value add potentially for the client. The banker can focus on what they need to do. They can be smarter about the kind of business that person runs and what the broader set of financial solutions that could really help that business. That's a lot to put on the banker, just that piece. And so we got to find ways to take a bunch of other stuff kind of off their plates. And I think banks are doing that pretty successfully, but it's a wholesale kind of change in terms of what the banker's role and responsibility is in sales and customer development and relationship management, and then all the tools and the stuff in the background they have at their disposal. They've got to learn to use them, right? You kind of get left in the dust, I think.
Yeah, I think you're absolutely right. One of the things that we've also seen, at least among a number of community banks, is the idea that they can't be all things to everybody anymore, and they've got to become more targeted in their offerings. Are you seeing that as well in your practice?
We are, and that takes a couple different forms. I think the smaller community financial institutions still sort of have bankers who cover a lot of ground and are the primary sales point for a lot of the sort of product that can be brought to the market. But as you grow, you've got to get more focused and I think a lot more targeted. So that takes a couple different forms that can be industry oriented, right? So we see a lot of banks that are kind of focused on verticals and trying to get smarter around the kind of information that's useful to those verticals, the set of solutions you can bring to the table, the partners at the bank that make the most sense to have in the sales meetings. All of that is easier to figure out when you're focused. If you're trying to do it broadly, it's sort of just, it can be kind of a mess. But when you're focused, you can be pretty lasered in on things that would really resonate and matter. So that's one way. And then, of course, there's, some of our larger regional institutions also have commercial lending business lines that go beyond their geographic footprint and real expertise in those things like SBA lending, equipment leasing, equipment finance, things that help a bank to sort of extend its footprint and serve a broader geographic market, but really do require a whole infrastructure sitting behind them and a degree of expertise out in the field with specialized bankers and the like. So yeah, I think all things to all people is maybe okay in smaller geographies, more, where you can go to a single banker and they've got they can be thoughtful about what works for you, et cetera. But if you're in growth mode, at some point that is not going to work. You've got to get folks zeroed in on, commercial real estate lenders are distinct from typically your C&I lenders, who are distinct from your SBA lenders, who are distinct from your equipment finance team. And as you grow, now those folks all work together. They've got a general sense of knowledge across all of those lines, of course, and know when to bring their partners in. But that partnership thing is the challenge. That's the real hard part, breaking those silos down, getting people to share relationships and really quarterback their relationship, not own it.
So I want to ask you a question that sort of ties to that, because one of the areas that you help at least a couple of my clients in is in the wealth management area. And I think that there's a huge potential if the commercial side of the house and the wealth side of the house are successful in partnering. What would you say to that?
No question. I mean, I think you even see, just when you look at some of the financial institutions that have some of the highest valuations in our industry, they figured out how to do that better than others. And so I believe that mid-sized banks really can win on this front. You can figure out how to get your wealth management partners who can serve both the investment needs of the business as well as the individuals who own the business or run the business. And being able to bring that to the table, especially for the low end of middle market, larger small companies where the owners are still pretty involved in the financial decisions, and they need help. I mean, they readily admit every piece of research in the world says, we need advice and guidance on a whole range of factors, and we'd be willing to do it all with the same financial institution if they can bring it to the table. Well, I think regional banks and super community banks can do that. But you gotta rethink that whole model. I sometimes advocate, here's a way to think about it. Commercial bankers are subject matter experts and wealth executives are subject matter experts. Who's going to really be the relationship manager? And, that sort of gets people thinking just a little bit differently. I'm not saying it's not one of those two, an individual in one of those parts of the organization, but now you've got the treasury team members who can also bring some significant value to the table. And you got to really think about, how do we maximize that opportunity? And it is going to be a people thing. Somebody's going to have to really work it and get the team in there. So you see more and more, we're seeing many institutions kind of even rethinking private banking, as maybe that's the role of a private banker to be the quarterback, bringing all those parts of the institution in. I don't know that it matters whether it's the private banker or the commercial banker or the treasury specialist. Whoever's got the relationship is probably the best person positioned to do it. I think you're right. I absolutely think you're right. And I'm remembered of a visit that I once paid to one of the banks you worked for. And I was meeting with the head of private banking credit. And I made the comment, this was in the days of JP Morgan and 23 Wall Street. And I said, so how many private bankers do you have, Mike? And he said, 1,500. And I almost fell over, but what they defined a private banker to be was anybody that was dealing with a privately held enterprise. And the notion that, as a banker, whether you're called a private banker, a commercial banker, or a wealth banker, you have to understand both the personal and the business issues and know when to bring people into the conversation that will add a level of expertise. But it is interesting to think about who should lead a relationship strategy. Right. Because today you need a team. You absolutely need a team. Yeah. And whoever the customer trusts is the best person to lead the strategy at that individual institution, because it's all about trust. Absolutely. So when you think about the strategic planning sessions that you've been conducting with your clients over the last 3 to 6 months, what would you say, if you looked at the massive, recognizing they're all different kind of institutions, what would you say that the 2 or 3 top growth opportunities are? Woo, growth opportunities. Okay, so we're in an interesting, the external environment's interesting, and it's still a bit uncertain. Our clients are feeling better about their commercial lending pipelines right now. So I do think commercial loan growth in the coming years will be a major focal point. And I think there's real opportunity to see that kind of get back on track to a level that's considered to be good. It hasn't been that good for a lot of our clients for a couple of years, obviously, absent PPP, taking PPP out. So I think the growth focal points will be commercial lending. And I mean that in a very broad sense. That could include SBA loan expansion, for example, but figuring out how to really grow the commercial book is a big focal point. I think the other growth focal point is digital deposit account acquisition. I think a lot of our clients are trying to figure out how to really play that game much more effectively. And I believe they have to figure it out or they'll be left behind, because that is the way people will open their checking, savings, and other types of depository accounts in the future. And if you're running a commercial bank and your major focus is commercial loan growth, if you don't have a deposit funding strategy, you're going to find yourself in trouble. I know that's not an issue right now because there's so much liquidity in the banking system, but it will be one, and it'll be one fairly soon. And the big fintech companies and the big banks have figured out how to do it. And so we need to get that figured out. So that's another opportunity. It's a challenge because it requires investment. It requires a whole infrastructure. It requires a whole new set of skills and knowledge around digital sales and digital marketing and putting all of that in place. So but I think that's a big deal. You know, the other area that you're going to see a lot of focus on is M&A. I mean, we've already doubled the volume of M&A transactions from last year, doubled through the end of September. So it's on track to be more than doubled by year end. I think when you're operating in low growth, low margin environment, which will continue, that's just going to be a major focus. So we'll see. You know, we have to prove to the investment community we can grow organically, but if a transaction presents itself and it makes sense, it's in markets you're trying to, it makes sense strategically. I don't think you just go out and buy banks because that's all you can figure out how to do. If that's all you can figure out how to do, then you've got a bigger problem. But if that institution brings skill sets to the table, gets you in a geography you're interested in being in, maybe has a line of business that you don't have, like wealth, and you really want to grow that. Very difficult to grow a wealth management business from scratch if you're not in it and you're, you know, a $5 billion bank or bigger. You're not getting in it unless you can really buy your way into it. It's too late. It'll never become material in terms of its earnings contribution if you try to do it organically. It just doesn't work. The financials don't work. So so those are the things I think we'll see, you know, as we look, we won't see branching and excessive, you know, geographic market expansion until we're in a stronger growth economy. You'll see it through teams, you'll see it through hires, you'll see it through M&A. You're not going to see it through, we're just going to start building. I know some of the largest institutions are doing a little bit of that. I don't think Chase has taken its foot off the gas pedal. I think it eased up a little bit on its geographic market expansion, but the rest of the industry is going to hold off on that. Branching is not, you know, you'll see LPOs, you'll see stuff like that, Ned, but you're not going to see this sort of aggressive branching and expansion anymore. So those are kind of the growth opportunities that, you know, I think we're seeing. I mean, in addition to growth, you know, the other big topic on the investor calls is sort of this overall digital transformation of the business and an ability to explain that. And I still think there's a lot of room for improvement in the game plan in a lot of institutions around that. You know, it's not just account opening and sort of that digital banking. It's much more than that. You know, it's a fundamental transformation of the back office to streamline all those processes, make them far more efficient, that kind of thing. And I think you got to be able to talk to that broad conceptualization of a transformation of the company over the next couple of years with the technologies that you, in many cases, you've already bought or you're paying for. So I think that's the focus we're looking at.
Wow, that's a great overview of what's going on. So last question, looking into the crystal ball, I saw a survey that was published not too long ago of banking executives, and they were asked to weigh in on the probability of a fintech or a big tech firm being a top 10 financial services provider over the course of the decade. 2/3 of them thought that would happen, that a fintech or a big tech firm would enter into this as a top 10 financial services provider. Do you think that's going to happen?
I do.
Yeah.
The model that emerges might be weird. So I have to think about it that, you know, they're not, I don't see Amazon getting a banking license or even applying for one, or Google or Square. Square's got one. But, you know, so the model that emerges, the partnership that emerges, the way that gets done, I have to really think about that because I don't think the regulators are just going to hand them a banking license. But yeah, I mean, if anything, COVID has just accelerated the transition in terms of the way people buy things. I mean, it's quite amazing now, the volume of online activity and purchase. And so, that's where anybody who can position themselves in the middle of that flow of commerce from a payment standpoint, I think has the potential to be one of the biggest financial services providers we've ever seen. I mean, we've seen it in other countries, obviously, but here forever, it's the banking system kind of set separate from the retail and shopping system of the country. They're beginning to converge. And so to the extent they do, I don't think it's going to be a traditional financial institution that wins there. Now, that doesn't mean, that banking is no longer relevant. It certainly is. But yeah, I think we're going to see it. I think it'll happen faster than people think.
Well, I think you're right. I think it's going to be interesting. I hope that over the next decade of your firm's practice, that Capital Performance Group helps bankers figure some of this stuff out, because you have done a great service. So I appreciate your spending some time in this NedTalks, and I hope get a chance to talk again down the road.
Thank you so much, Ned. Great to see you.